Good evening. This is the Elliott wave update for the S&P 500 for Thursday, June 23rd, 2022. Interesting day in the markets, long periods of no true activity, and then long periods where it seemed there was just a total absence of sellers. And much of the day was kind of choppy, tight in a $3 to maybe $5 or up to $10 range, and not really moving anywhere quick. And then all of a sudden you just get a burst, but it's a steady absence of seller, burst of buyers just pushing. I want to add just very quickly that I attach no bullish or bearishness to any of the trading that's going on. Yes, the market is moving higher, but it is not broad-based. It is not, in my opinion, a turn in the market. It is nothing more than a corrective phase within an ongoing corrective phase down. So what does that mean for what's going on? It continues to be very more focused on continuously Apple, Google. Today, Facebook joined the party, but also did Microsoft. We spoke about Microsoft yesterday. I talked about the fact that, they could really start to pull this thing higher. And does it have the ability to move $7? And it's like, yes, it does. Does Apple have the ability to move an additional $2 tomorrow to get it up to 140? Yes, it does. Will they make a shot for 145? I don't know. But anything can happen because we're in a thinner market time. We're in a period where, unless the sellers wake up and go like, oh, you know what, that is a good level. Boom, I'm in. Sell. Then the buyers will continue to look for value because they need to buy and there's nobody there to provide the liquidity for them. So they push to the next value area. So it's really nothing to do with bullish or bearish. It's a matter of filling an order. It's a matter of quantitative trading, what an algorithm is putting together. When A plus B equals C, it's called execute. And they're making a great deal of money. So quantitatively, they move a lot faster than you and I. So what does that say about what we're doing right now? I continue to view the S&P as being within the beginning stages. And right now we're beginning to put in what I feel could be the completing points for an intermediate C wave, which would then complete a primary A wave. Now, that's one of my preferred views. I'm running two and they really go side by side. The other preferred view is that where I have marked as intermediate A and intermediate B would be intermediate 1 and intermediate 2, giving us the thought that we are in an intermediate third wave down. And within that, possibly within the minor fifth, but within a minor fifth, it could just kind of keep on pushing and give us a solid push below 34.91, which is an area that I'm now looking for as a possible completion point. But I think the market has the ability and the will to push through that. And then we start heading down towards 3180-ish, 3200. That's the difference. We start to fall through where's the support back in 2021. That's where you got to go to find the price support as we're coming off. Now, is that a bearish picture? Yes, but it's totally based on price action. So a lot of steps have to fall into place before that would come into fruition. So right now, that remains the preferred count. It remains carrying a 50-50 probability of being shifted into this is what's happening. But we still need to let the market tell us versus me telling the market. So again, that remains the way it works. So in the meantime, I am viewing this as intermediate A, B. We're in an intermediate C wave. Within that, which will consist of 5 waves of minor degree, we're within that minor fifth wave down. And within that, we're looking to have been in a completion area for the minute wave 4. So that leaves us with a fifth of C. So we could be in a very finishing stage here, but it's actually going to involve, seriously, a drop of about 300 points, S&P points. I mean, we're sitting at 89. We got up to 38. We got a titch above 3,800 today. It failed yet again, and now we're trading at 789. Doesn't mean we're going to stay down here. Doesn't mean anything. We could drop a lot further. We could rally, get us back up. Let's take a look. I'm going to drop it down to the hourly chart. You see, we're still in this cluster. Now, one thing that I can do is if I'm going to use this as the completion point for that minute 3. And I'm going to put in that this is A of minute 4. This is B of minute 4. What's that price? Then C of minute 4 has the potential, look at that, 38.42. And I bet these might be off because it actually is 38.40. 38.40 is also where the previous fourth comes in. So if I open this up, we can go back and look at that for at 38.33 to 38.40. So we have a previous fourth, and this would be the likely area it stops. Elliott wrote about it. Elliott told us, generally, fourth waves will find their terminus, their endpoint, within the price area to the terminus of a fourth wave of 1 lesser degree. 1 lesser degree is right here. We're heading. We have to leave that open. We're doing an ABC up. There's A, there's B. We're in C. Still has a possibility for additional upside. Going back down to that hourly chart. Could we be done? It's pretty messy, but yeah, keeps it inching out new highs. And just now, I mean, it got above the 200 moving average here, fell back below the 200 moving average, now sitting right at it. So once again, here we are. How many times do we want to do this? How many times do we need to do this before it's just like, it's done, boom? I don't know. That's what's yet to be determined. But these are the possibilities, and this is what we need to look at. The price action will tell us. If you start to see that it breaks and it starts breaking resistance, and you're a day trader, I would jump on board. Take the shot. You see where your resistance is, and you see if it breaks, that the next level is 30 points. You might want to try and grab some of that. And it's going to look like that. That will be within 10. They're just going, they're taken. So if not, then you're going to wait. But I think we have to leave that open. Break down from here, same deal. We need to see break below the 8, the 20, the 50. The 200 continues to hold it, really hold the tops. Yep, it gets above it. We do put in a slight new high, but it fails. Each time it's done it, it's failed. 1, 2, 3 times. Actually, 1, 2, 3, 4, 5 times. So I don't know if 6 times the charm, I don't know. In any case, downside, we need to see it at least break below the 50, which is at 37.61. Then it needs to break 29. Then it needs to break 693. That should start to get, again, I know I'm going to have to eat my words, and this time they're going to be nails. That is where the hammer begins to put in the final nail, apostrophe, or nails, plural. Because it may take several to really knock it down and just say, we're going this direction. So yet to be determined. Now, continue to follow the moving averages. Use them on your short time frames. They continue to work. They really do. And you'll see, there they are. And right now on this 5-minute, 250, 20, kind of jamming up there. But if they clear it up a little bit, it's got room and it'll go. So if you're trading off a 5-minute chart and you kind of see this, we come in tomorrow and this is where we are, and they start to perk, they start to break, 93, 94. Take a ride. You're going to, it's $4 to $6 or more. And with the energy of a new day, it could go. All right, I'm going to leave it there. Follow the moving averages, follow the price action. Have a great expiration tomorrow. Don't forget, it's expiration, and all this price movement is going to be tacked right to that expiration. Have a great day tomorrow. Our next update will be on Sunday, the 26th.